Welcome back to Fast Market here on the Schwab Network. It's time for our cash tag segment, so let's bring in Landon Swan. He's a co-founder at LikeFolio. Welcome back to the show, Landon.
Thank you, Tom. Good to be here.
Good to see you. We're talking retail. It seems like it's been a choppy trade as far as retailers that are doing well, retailers that maybe aren't executing that well. But I took a look at, typically we talk about Foot Locker going into earnings, but then I saw ANF and I saw the chart on it and how it's exploded. And I need some data, Landon, because I don't get it. I mean, Abercrombie and Fitch was popular 25 years ago. Are they back? Is this, supported by your data?
Yeah, I tell you what, I mean, if you look at this stock move, this last quarter was unbelievable. I think it was like $22 right before the report, and now we're, around 40, I think. So absolutely unbelievable increase, plus 80%, like you mentioned earlier. So expectations are extremely high going into this one. That's the main thing that gives me pause, right? That always worries me. I mean, we talked about DICK's yesterday, and that was all-time highs, and it's not anymore. So interesting there, but the data looks pretty good on it, actually. I mean, if you look at everything's for us is year over year, so we don't have anything for year over 2006 or anything like that. But it looks pretty strong. I mean, you look at them versus a lot of the other brands. On the web visits, for example, it's very strong. Abercrombie and Fitch overall is up about 34% on a year-over-year basis when it comes to just web visits. And then if you go down, you can kind of break it down by all the different competitors that they have. They are, for example, Free People from Urban Outfitters is a plus 30%, Anthropologie's plus 20%. So, they are the leaders among their peer group when it comes to web visits. And it also looks very strong when it comes to just total consumer mentions on social media. That's up significantly year over year as well, about 40%. So the data that we have shows a very strong year over year. The question for me is how much of this is priced in, because last quarter they reported that their flagship brand Abercrombie and Fitch had plus 14% same store sales year over year. So and the stock is, like I said, it's almost doubled. So everything is really high when it comes to expectations. Here we've got the chart that I was talking about just a minute ago on Abercrombie and Fitch and all the others. And, you can throw in Hollister included in that company. The rest of them are competitors, and you can see they're doing really well. Urban Outfitters is the one that's kind of fallen behind, even though they've got their flagship brands falling behind, but Free People and Anthropologie are doing fairly well. Abercrombie & Fitch is the leader here on website visits on a year-over-year basis. Social mentions are hitting about the same mark. I think it's plus 40%, so right there. Everything we've got looks really strong. Earnings score is strong, but is it going to be enough to keep up with expectations? Because anytime a stock almost doubles in a quarter, basically, you've got to be expecting some really strong results. And so that's the only thing that gives me pause, especially, like I said, coming off of DICK's yesterday.
Landon, full disclosure, I'm not sure that I am their target audience for Abercrombie and Fitch. as I don't wear a medium, is not my main size that I fit into. Maybe you're a little bit younger than us. You've probably got some Abercrombie and Fitch. My children, I've bought Abercrombie and Fitch for my children. But here's the thing, Landon. It seems like their stock got hit, and they had problems during the supply chain. Probably things getting made in China, things like that. It sounds like once they got that figured out, and once the supply chain problems settled down, they were able to stay trendy and stay on point, and that's when their numbers started to go up. Am I wrong there, or is that why they seem to be outperforming now? Hollister, not so much, but Abercrombie & Fitch seems to be doing extremely well.
Yeah, I think I think one of the things that they did is they went for the kind of the more inclusive messaging. If you look back 15 years ago, it was very selective, and everyone was in great shape, and they were all models, and I think they've moved away from that now, and they're trying to sell to a broader market, and it appears to be working. I think that's a big part of it. They're also focusing more on the quality of the materials as opposed to the branding, just selling the clothes themselves. So I think that in this world, you've got so many good choices when it comes to really high quality clothing that you've got to compete on more than just your brand name and your ability to get out that brand awareness in marketing. So you have to have high quality products, and I think they've turned that around as well. So those are the two main things. And of course, yes, once you get out of that supply chain hiccup, you can get back to normal. And you can see from the stock chart here that the lower line, that's sort of that lighter colored line, they did get crushed back in May of 2020. But so this is a very volatile stock on earnings. It can definitely move really big. Definitely encourage anyone who's trading this to be risk defined, and you guys always talk about that, so I'm sure viewers know how to be risk defined with options and spreads. But yeah, I think it's a bit of a resurgence because their strategy is changing from pure branding to actually widening their net a little bit and increasing the quality of their products.
Yeah, the thing that concerns me, and I think you mentioned it also, Landon, is the move that it's already had so far this year. That kind of scares me a little bit. It's above its 50, 100, and 200-day simple moving averages. But when you look at like happiness levels here, I kind of compare, I try to look at apparel companies and compare what they've done after earnings so far this quarter. And I look at like Ralph Lauren, Macy's today down 12%. That's more of a retailer. But that's kind of what I think you have to look at. Are consumer trends changing a little bit? Are they going to talk about shrinkage as far as theft goes? You just don't know at this point. But then all your other data is pretty positive, right? And do you have a score on this going into the results?
Yeah, so first of all, happiness, they're pretty much right there with the rest of them. American Eagle is actually the highest of the group on happiness. Abercrombie is about 70%, which is strong. And there's no red flags on happiness. Nothing's moving in the wrong direction. People aren't overly happy or overly dissatisfied with the products. The score that we've got is plus 56, which is a strong score. That's from a scale of -100 to positive 100. So very bullish on this one. I am, personally a little scared of it because of the just how much the stock has run. But given the fact that it can move so big on earnings, I wouldn't hate an aggressive bet to the upside. I wouldn't want to do anything that that I lose a lot if it goes down a lot. So I would want to bet on a big move, and I'll probably lose on that. But if I win, I'll make 2 or 3 or 4 times my money, something like that. But it definitely gives me a little pause to see the run that it's made. I like that it's pulling back a little bit today. It's not much, but at least it helps a little bit for entry.
I like to sleep at night going into earnings events, Landon, so staying risk defined, right up my alley also. All right, great stuff, great data as always, Landon. Have a good day.
Thanks, guys.
All right, that's Landon Swan, co-founder at LikeFolio, breaking down the data for us. I mean, he put it to us squarely. It's got positive data on it, Kevin, but this stock's up 78.1% in 2023. I mean,
right.
It's, Dick's Sporting Goods, they were positive on that, but, how are you